Welcome back to another episode, my Take Flighters. You're joined today by your four hosts, myself, Pabilo, Olu, Daniel, and Shuel. As you can see from the headline today, we are discussing the latest news in cryptocurrency, which has been making noise again due to Bitcoin reaching a record high of above 69,000 US dollars. We're going to dive into the drivers behind this surge, what is being discussed amongst experts in this community, possible risks to consider for the everyday investor, and what the rise in Bitcoin means for the other cryptocurrency coins.
A disclaimer before we start, we want to make sure you're all aware that everything we're sharing in this episode is public information and should not be considered investment or trading advice. Please seek professional guidance before making any investment decision.
Take off, take flight with you. For we never fly, but we're flying.
Guys, back with another one. Really looking forward to discussing this, what do you want to call it, volatile arena. But before we kick off, just an icebreaker. My icebreaker for this episode actually was inspired by the guys over at the Mandem podcast, and I actually saw the original tweet or story by Jamie, who's also part of that group. And the icebreaker is the following. I'm changing it a little bit, but the essence is the same. For £100 million, you are in a room with 99 other people, and in order to win the amount of money, you have to select something that you think you are better than the other 99 people at. What is that thing you think you're better than the 99 other people?
Nice, good question. Shall I go first?
Go ahead.
Yeah, you go first.
So before you start, remember it's £100 million up for grabs. What are you the best at?
The one thing, you give me some dates of the people's birthdays or something, I'll remember all of them.
Okay.
And the year.
Okay.
Yeah,
okay,
you know,
I can see.
Yeah.
That's cool.
Yeah.
That's cool.
Yeah.
Sure. Olu, you need a bit more time. I can go because I've had a chance to think about it.
Yeah, I think in this case, whoever is the proposer, it would make sense for them to go first because they have had more time to think about it.
Yeah, so I've done it. There's different ways, but I've actually thought about within that particular rooms. Otherwise, you can make it across the year. I think I would have the best chance at being able to secure the £100 million by being the most influential person in that room to inspire and motivate around investing, financial literacy and investing. So to take the everyday person and get them to understand why it's important to invest their capital. That's what I think I'll be the best at in that room.
Interesting.
Interesting.
My one would be, similar sort of. So if we're in the same room, Pete, you might have some problem.
Yeah, but that's if it's going to be property versus stocks, you've lost the money. You're not going to win.
Being able to simplify complex topics around investing. So if that's in terms of stock market and also financials. So in terms of my career, I've had over 10 years in the finance role as a director. And one of my feedback that I always get is you're able to simplify very complex financial situations to non-finance people. So
that's cool.
There's 100 people in a room. I know I'll be able to bank that. I was going to go with press ups and push-ups, but I never know who else is in the room.
I inspire, and you simplify. I don't mind splitting the bag.
Cool.
75 million to myself, 25 to yourself. Cool.
Not sure where you got your numbers from, but cool.
You need to sure, go ahead.
Great question. I have to give a shout out to the Mandem podcast. So hopefully you guys are listening to this. I came across a clip where you guys were discussing this. So it's a fantastic question. I think struggling here, do you know, I would say, the first thing that came to mind was football. And then I realized now that wouldn't be fair. No. Okay, seriously. I think in a room of, let's say, a typical 100 people.
No one's easy, sure. I just thought about it now. Go ahead. Let me see if you can answer what I'm thinking.
So I would say collectively as a team, setting a direction as a group, getting people to buy into it and working towards it. That's what I'd give myself.
Okay, I think I could. I was actually going to say like your ability to socialize and get all the 99 people to know each other through whatever you're doing. But I guess you've said it in a similar way. So interesting. I think great question, and I think the answers speak to what we think are our strengths. Cool, love it, perfect. Okay, so before we dive deeper into today's topic, I thought it would be useful to re-educate our listeners on cryptocurrency, as I know we have a range of new and loyal listeners at different parts of their journey. So cryptocurrency is a digital currency, which is decentralized. This means by design, it's free from any third-party interference. And it's set up so it's not controlled by any government or banking institution, unlike the way our money system has worked over the last 200 years. So if I want to send money to Daniel today, it would need to go through whoever we bank with. And depending on the amount, it's most likely to be checked. There could be possible delays, fees associated with it, and the bank could even refuse to send the amount of money that I'm requesting. With crypto, however, one of its main attractions is its ability to facilitate peer-to-peer transactions via the blockchain, which is an online platform that records transactions in blocks and is very transparent, so you can trace all transactions right back to its origin. Now, as of Q4 2023, there are over 10,000 cryptocurrencies, but Bitcoin is the world's first widely adopted digital money and was introduced back in 2009. Since then, Bitcoin has experienced a wave of peaks and troughs. One side of the argument says that it's a great store of value. It democratizes wealth and levels the playing field. It's faster, it's cheaper to operate, whilst the other side would argue that it's too volatile and there are risks that accounts can be easily hacked. Now, despite all the negative press around Bitcoin and cryptocurrency, from bankruptcy to pump and dump campaigns to fraud cases, Bitcoin has found a way to continue rising and has reached a new record high and carries a market cap today of 1.2 trillion. And Daniel, our crypto expert, will help us understand exactly why Bitcoin has reached an all-time high.
Whoa.
Yeah, Daniel.
I feel like that guy from BBC who just walked into the interview. Like, whoa. Oh. Yo.
No, I'm just kind of going on.
I was not expecting that, but no, cool.
I was just jumping onto you. All right, cool.
Okay, so I think when we look at if specifically an all-time high or that we reached this week, I think that has a largely to do with the ETFs that were approved in January the 10th, and a day later were launched and started trading. So when you look at ETF volume, so BlackRock's ETF, so there are about 10 different issuers who issued an ETF. An ETF is an exchange traded fund, and it's a type of pooled investment security that can be bought and sold much like an individual stock. So an ETF can be structured to track anything from the price of an individual commodity to a large and diverse collection of securities. So that's what an ETF is, for those who don't know. So the BlackRock's ETF called IBITS is the biggest ETF in the game. For those who don't know, BlackRock are the biggest issuer of ETFs globally. And in over 700 applications, they've only ever had one ETF filing denied by the SEC. And I won't go into history, but the last couple of years has been a very tumultuous time in cryptocurrency because the SEC had delayed approving or rejecting an ETF for Bitcoin, spot Bitcoin ETF. We have a derivative of futures Bitcoin ETF, which I think launched in 2021. But never a spot Bitcoin ETF. So in the last 7 weeks, BlackRock's IBIT ETF has accumulated $10 billion in AUM, assets under management. And to give you context of how big this is, gold, GLD, the original gold ETF, took 3 years to hit this number. 10 billion was originally an optimistic number to reach for all ETFs for the entire year of 2024. On Tuesday alone, 10 ETFs tapped the 10 billion in trading volume during the session, breaking last week's daily record. So it's very, very big in the industry about what this means. It's not just for the digital assets industry, but just globally in the ETF world, how big this is, because it's often dwindled and downplayed. So P asked, why do we think the price is increasing? So I think what's been happening is Bitcoin had its IPO moment shortly after the ETF launch in January. Since then, there's been a progressive acceleration in what I'll call acute supply and demand. So after the ETF launch, we saw $1.5 billion $1.5 billion in net inflows, meaning that those ETFs bought about 30,000 Bitcoin, whilst there was only about 20,000 Bitcoin produced. So in January, Bitcoin's ETF bought about 1.5 times the new supply produced. That further accelerated in February when the ETFs took in $6 billion in net inflows. They bought around 114,000 Bitcoin, whilst only 26,000 new Bitcoin were produced. That's 4 times the amount of Bitcoin produced. And so far this month, we're seeing even more acceleration. This insatiable demand, I'd say, by the Bitcoin ETFs is also coinciding with this FOMO, trying to get ahead of the Bitcoin halving, which I'll talk about in a moment. So this is happening next month in April, where we could see a further demand squeeze. So many people are trying to get ahead of this. And I think that's why this week specifically, we've seen Bitcoin BTC break the all-time highs of 69,000, which we last saw in November 2021. And immediately after that, we saw it corrected down about 12%, but it rebounded shortly after. And the reason why I say it rebounded or went down somewhat was, I think the sell-off is a mix of profit taken and liquidation. So short-term traders and those who are using leverage have marked their positions. So we could see that $69,000 mark retested in the subsequent next few days, few weeks, and ultimately we could break that 69,000 mark. I think that could be the new floor for the short term. But as we saw last year, Bitcoin dropped to as low as $12,000. So there's also, there's a crypto fear and greed index which reached 90 on the day of all-time highs. So we can see people are certainly trying to take their profits and take their marks.
Can you see why I said crypto expert? It sounded like we was on CNBC getting a nice download of what's happening in the arena. No, I think fantastic insights. One thing I actually just wanted to plug into kind of what you were saying, Daniel, for our listeners. I was listening to Mike Novogratz, who's has a large exposure to Bitcoin, mostly how much of his wealth is made up today. And he said, and he gave a perspective around just the impact of ETFs, because for our generation of people, we are using platforms like Coinbase and some of these other more techie platforms to buy and sell this currency. And then he neatly explained that what the ETF does, it actually opens up, of course, the opportunity to pour more money in, but it comes from the demographic of people that usually go through stockbrokers to buy their stocks, shares, or currency. So whilst you've got baby boomers that own quite a large portion of the wealth within this world, they have now been able to easily access cryptocurrency through the ETF. So this is what is helping this injection. I think.
I'll definitely add to that, because I think in the last cycle we reached all-time highs of 69,000 from retail investors. That was very much retail driven. Now with the Bitcoin ETF approval, this is essentially the ETF wrapper gives that institutional stamp of approval. It's been approved by the regulators, and it now means people can allocate part of their portfolio into Bitcoin. And with the institutional capital coming into crypto, it's a huge amount. And I think 69,000 at the end of the year, who knows what number we could get to.
But before I pass it on to Olu, who's going to, highlight some of the risks, which is what he loves to do in this space. Just a quick question for you, Daniel, is from what you can share, when this happens within Coinbase, what's the mood within the company? How are the associates reacting? How does it change, for you?
I think when the market's like this, it's almost the whole industry is on fire, in the sense of there's more talk around it. And I say that in the sense of when we were in last year, we were in the dumps, we're down in terms of the price of Bitcoin. It's funny because I'm on some Telegram groups in terms of like media outlets, and everyone was negative around Bitcoin, around the what Bitcoin's doing, the price. It's now it's gone with the wind, it's done for everything. And I won't name the particular outlet specifically, but it's just funny to see the tone in how they portray Bitcoin and digital assets then versus now. Whereas when we get to a bull market, every day there's a new flavor, there's a new story. Everyone's talking about it. Meme pages on social media are talking about it. Every news channel that was somewhat against it is now given some attention to Bitcoin because they can't ignore it. And it shows just how flippant people are to two things. Like when it's down, everyone's kind of kicking a dead dog when it's down. But when it's high and up, everyone wants to talk about it. There's the whole amount of FOMO, people wanting to invest. And I'll tell you what, if you're going to invest at an all-time high or in FOMO, you're too late. You're too late.
I think Daniel, it's the absolute perfect segue for Olu, because this is exactly what he hates in terms of the stories and the narratives around when it's high and when it's low. So Olu, the floor is yours. Please, share, your thoughts around the risks of what's happening within the cryptocurrency space, especially Bitcoin. Is it the right time for an everyday investor to invest? Because there is this FOMO that happens.
Yes.
And please, the floor is yours. I know you've got a lot to say, and I'm like,
can I just add one very quick remark before giving Olu the floor? This is why, for our listeners, if you haven't subscribed to our YouTube channel, which we are pushing more this year, the face Olu has made for the last 5 minutes is worth you going on YouTube, clicking on Take Flight Podcast, subscribing, and watching what he's about to do now, because the last 5 minutes, his face has said it all. So Olu, back to you.
So in regards to my face, let me start off by saying Daniel explained Bitcoin really, really well. I think so many different dynamics that Daniel addressed. And look, when I think about crypto and cryptocurrency, it's multiple cycles. Like Daniel said, it's very volatile. And I base crypto's volatility based on the people on social media, like these crypto bros.
Degens.
Yeah. Last year, they were awfully quiet. I wasn't hearing anything about crypto this, crypto that, crypto this. Now, you can imagine with the growth which Daniel's articulated, a large portion of that, everyone's talking about it because of the terminology FOMO, right? A lot of people see massive growth, close to 200% plus in a short period of time. And people say, wait, I could double my money. But I think the complexity I find with crypto, and Daniel can probably address this, or you can feel free to interrupt or chime in, is when it goes back to intrinsic value. The part that I struggle with Bitcoin and a lot of these cryptocurrencies is around what is their intrinsic value. So we hear a lot about like Bitcoin, the point of it is through transactions and transacting, a quick, easy way of moving money across, but people are not doing that, right? People are treating it like gold. The majority of people are purchasing it and holding it for a period of time. Where when you start to look at stocks, which are traditionally what I like to invest in, there's intrinsic value because you've got the company's assets, the company's cash flows associated to that, right? So that's the first part I start off with. So when I think about cryptocurrency, the part where it, in my mind, it generates a buzz, it generates value, is supply and demand, right? A lot of people are saying as the supply drops, and Daniel's going to talk about the halving component of it and how it's going to reduce the amount of mining, that would mean there's lower supply, which would then increase the demand and hopefully the value will go up. I talked about NVIDIA previously, and I did an episode about NVIDIA and FOMO and people missing the FOMO and people getting on the FOMO train. Now, NVIDIA is a little bit different to crypto because there is intrinsic value right there. A lot of people can argue about the valuation of NVIDIA, but when you start to look at the earnings and the profitability, like I mentioned, intrinsic value that is generating, you can somewhat justify that demand there. On the crypto side of it, I still struggle. Now, what if I was a new investor, what would I do during this period of time? The first thing I'll start off by doing is educating myself on what is a cryptocurrency, what is it used for, some of the great terminologies and topics that Daniel mentioned about it being put into ETFs, what that's going to mean for it being institutionally accepted and the more demand going into there. But the reality of it is it's at an all-time high. I wouldn't say this is the best time to put a lump sum of money into it, but if you do truly believe in the thesis and the philosophy around it, maybe it's the time to something called dollar cost average. So if it's £100 a month, £200 a month, you could pull it in there. Now, the key things I would take into consideration when investing in assets so volatile is, one, how much of my net worth would I want to allocate to this particular asset class? I would not remortgage my home. I've been listening to so many people on these talk shows talk about crypto, and they're like, hey, it's going to go to the moon. Next month, it's going to be worth 140K, whatever, these ridiculous numbers. And then the person says to them, are you advising people to remortgage their homes and put, no, don't do that, right? Because no one can predict the future. So I would never advise anyone to put a large sum of money into an asset class, any asset class, let alone even crypto when it's at all-time high. What I would say you should do, if you do believe in, if it's a stock, cryptocurrency, is a dollar cost average. Decide a percentage that you want to put in there. And again, it's for a long-term investment. The one thing that I think cryptocurrency has proved, even though I'm not crazy about it, and I do own some of it, but I'm not crazy about it, is holding assets for the long term is where the profit and the gain is made. So if you're someone that purchased cryptocurrency, even if it was at the last all-time high, right? As long as you didn't sell today, you're still seeing slight profit associated with it. So that talks about trading. If you're trying to predict where it's going to be next week, next month, that's how you're going to lose so much money, because you'll be jumping in and out of different asset classes. But if it's something that you want to go for the long term, personally, with the prices that they are right now, I wouldn't put a large sum in there right now. I'll probably dollar cost average over a few months, a few years, etc. Maybe wait for a correction or pullback slightly before doing it. And my last point that I would just like to mention when it comes to the cryptocurrency is, if you truly believe, and when you speak to a lot of these people that talk about crypto, the question you need to ask them is, when it was down 80%, 90%, what were they doing during that period of time? Because I'll tell you, when Amazon dropped significantly, I was purchasing, right? When Apple dropped, I was purchasing. The reason is because I can understand the intrinsic value there. A lot of people don't understand the intrinsic values, and a lot of these cryptos, Dogecoin and all these random coins that exist, right? That's why they're not really backing it when the value drops. So be careful. Yeah,
I like what you said. I like what you said. They're not backing it when the coin drops.
but you also got to understand that some of those tokens that are introduced are pump and dump schemes. So some of them, anyone can create a token. So you've got to be careful of things that look too good to be true, because they often are. But Oli, to your earlier point about what is the value of Bitcoin and how should it be used?
Value,
so Satoshi Nakamoto, who is the inventor, or they are the inventor of Bitcoin, the white paper was published on the 38th of October 2008, and the first Bitcoin was actually mined on January the 3rd, 2009. So as P said, his vision was, or their vision, because we don't know if it's an individual or a collective group of people, was to propose an innovative way or to enable direct peer-to-peer transaction without need for intermediaries, as well as to be able to convert into fiat. And whilst, we may not be there with its original use case or its utility, we've seen that layer 2 protocols and blockchains, or layer 2 ERC20 tokens. So we've got every other cryptocurrency other than Bitcoin is referred to as an altcoin. So like Ethereum, other cryptocurrencies that have been created, and we've seen that they've been able to leverage different types of technology, be faster, rather than be proof of work, be proof of stake, allowed staking, so you to be able to generate yield on your investment. But also we've seen stable coins. So we've been able to send money cross-border that in an instant, rather than having to send money in very less developed countries, send money through an intermediary like MoneyGram or Western Union, which takes several days, and the fees are very high. With USDC, you can send it within seconds, and people can convert that to their fiat. We've seen in the news that Nigeria have tried to fine Binance 10 billion because they're saying that Binance's app has helped devalue the naira further. And I think Nigeria probably saw what the US government have done to Binance by settling the 43 billion and thought, 4 billion. I thought, what, we're going to try and get a slice of that pie as well. But there are definitely, whilst Bitcoin may not have found its sole use case utility-wise, there are other cryptocurrencies and tokens out there that have really accelerated this ecosystem and helped many people, not one, just save and preserve themselves from their foreign exchange rate, especially in Argentina where hyperinflation is present, but also to be able to send money cross border and have an alternative to how they want to spend, because there are many merchants nowadays that you can actually pay with crypto.
So Daniel, in terms of the technology, blockchain, I solely see the use case for the technology, right?
Yeah.
I'm dealing currently with PayPal right now. I've tried to transfer money into my account. It's been like 3 weeks. Yeah, it's left my account and it still hasn't hit my PayPal account.
Oh, wow.
So the use case of being able to transact on the blockchain, I understand that technology and I totally see the utilization of that technology, right? But in my mind, everything goes back to fiat currency, right? And that's my big thing, because of the fact that it's backed by a government. There's an issue I know where to go back to. Let's say, and cryptocurrency, Bitcoin has never been hacked at the moment. And I've brought this argument before. If it does get hacked, yeah, who do I contact? Where's the HQ? Where do I get my money back from? Like, there's no one there. And maybe that's the good part of it and the negative part of it, but it's not.
But you're essentially saying Bitcoin can't be hacked. What can be hacked is your wallet. And if you have it on a centralized party or something of that nature, then it can be hacked. But if you have it and you own it, your private keys, it can't be hacked unless you lose it, like a physical wallet, or you
lose it. There's no one I can contact.
It's very different. And I understand what you're saying, is because we've come up in an era where we are wanting. We've come up from an era where we've had physical things. We're now moving kind of into a digital world where we don't necessarily spend money. We transact with our mobile phones and our cards are on our system. But then in 20 years' time, Bitcoin and other use cases could be very, very normal. And even paper money be like, wow, what's that? That's very archaic.
Yeah.
But yeah.
No, it's some great go ahead.
Just last point, just before I finish it off, right, is in regards to risk and investing, right? I believe it was Warren Buffett that said it. Or one of the main rules of generating wealth is ensuring you don't lose the money, right? Generating wealth is a long-term game, right? A lot of us want to get rich quick, right? And half of the battle is staying alive. So if you are investing in riskier assets, understand that there could potentially be a correction of 80%, 90% in these asset classes, right? If now you're going to put 100% of your wealth into it, or a large amount, are you willing to take that risk? Yes, there's an upside element of it, but part of the game of wealth generation is about staying alive long enough in that game. And that means managing your risk. What is that percentage you want to put to a higher risk or more volatile asset?
Yeah, no, great exchange of points between you guys. I think one of the framings and how to help people shape their thinking is, what do you do in an arena where you're potentially an early adopter of a technology, right? You perhaps standing still and not invest in anything might not be the answer. Invest in everything you have, probably not the answer either. Somewhere in the middle is perhaps maybe the truth as to where you want to be, because a lot of what you're talking about, although the answers haven't yet been shared in terms of its full use cases, it's still an evolving project. But at the same time, you also want to be part of the ride in a certain way, from a knowledge standpoint and also a wealth standpoint. So yeah, I think people need to ask themselves, what do they do in an environment where they can become an early adopter in something like this, but not stand still. But we can talk a little bit about our investment thesis as we wrap up this episode. Shuo, I mentioned at the start of this episode that there are, since Q4 of 2023, there are over 10,000 cryptocurrencies out there. And what's great about Bitcoin is it almost leads the way. You know, rising tide floats all boats. As Bitcoin reaches its all-time high, you get other coins which are Ethereum, Solana, Litecoin, Ripple, that also tend to sort of rise in the same direction. Could you maybe talk a little bit about these other coins and the impact of Bitcoin to these other coins, to give people more context in terms of it's not just Bitcoin where things are happening?
Sure. Great question, Pabila. And just to bring the listeners back to what we said at the beginning of this episode, this is not financial advice. Please do your own research. We're having a conversation as a group of friends, which we hope will help you, the listeners, think about other things maybe a little bit differently. But just to reiterate, this is not financial advice. Now, of course, as you've sensed from the episode, as you've sensed from the passionate discussion, Bitcoin is rallying, and this has generated a lot of emotion. And with Bitcoin rallying, historically, on a factual basis, whenever Bitcoin has appreciated in value, it has had a knock-on effect with other coins. And the other coins sometimes are coined as alternative coins. And Daniel, please correct me if I'm wrong with any of my terminology. So with regards to how these other altcoins correlate with regards to Bitcoin, for the coins that are rallying, which means a positive correlation, so Bitcoin goes up during bull markets and then these other coins go up. This basically means that investors start to become very bullish on crypto overall. They see Bitcoin going up and then they start to believe in crypto again, as Daniel has mentioned, as Olu has mentioned. People start to believe in the market again, and suddenly these use cases become a lot more viable. So with a surge in Bitcoin, this can lead to a rally in other coins. But on the flip side, it can have the reverse effect where a Bitcoin surge can lead to a stagnant or even dipping prices for some alternative coins, because people can see the benefit of holding in Bitcoin with the rapid growth that we are seeing, for example, now. So they decide to sell off some of their other coins to double down in Bitcoin. Now, of course, there are some additional factors to consider. Each altcoin, as Olu has already said, it's very important that they have a use case that's viable. And then, of course, the overall market conditions play an important part as well. But just to share some historic factual examples, when Bitcoin hit its all-time high in Q4 2021, the last all-time high it hit, some of the other coins like Ethereum also reached new highs as well, which reflects a potential positive correlation. I think the only other thing that I would add with regards to some of the coins and some of the use cases, so Ethereum, which is something that you hear spoken about a lot, the benefits there are around decentralized finance, NFTs, which also came and went, which I think we spoke about in an episode on Take Flight podcast as well, are backed by ETH technology. And then there's a whole world of smart contracts and other things which are definitely above my pay grade, so I won't even attempt to act like I know what that means. But all these other coins like Ripple, Polygon, Solana, all these do have use cases. So again, as we've already said in this episode multiple times, do your own research. If you believe it has something in the long run that could provide value, then having some exposure to it could be something that's worth considering. But I think the question that Olu said is the key question. If things were to go down 90% tomorrow, would you still back this, yes or no? And depending on what your answer is, then it should inform your investing opinion moving forward.
Yeah. No, great insight.
That's great. I think just to add on that, I think sure everything you said is right. The impact it has on other cryptocurrencies. I think Bitcoin is seen as like the original. It's like
the big dog.
It's the big dog. It's the OG, and all others are altcoins. They're all alternative. And I think when you look at the top two, is Bitcoin and Ethereum, or ETH. ETH is the token, Ethereum is the network in which it runs on, and then you have ERC20 tokens, and you have other tokens that are built off the Ethereum network for decentralization and other use cases. Ethereum itself there are many institutions there are many issuers like BlackRock who are filing for a spot ETH ETF. The SEC, as of last week, delayed a decision on their filing. But the next key date to look up for Ethereum is the end of May, when I think it's the final kind of deadline push out that the SEC can do. And of course, if Ethereum is approved for an ETF, we could see something similar that's happened in Bitcoin happen to Ethereum. Not necessarily hitting the $69,000 or $70,000 mark, but Ethereum reaching new all-time highs. In the last week, Ethereum has gone up to about 3,900 as of this morning on the day of recording. I think it's all-time high is over $4,000. Whether we reach that in the next couple of weeks, I don't know. But with the Ethereum ETF filing on the horizon, potentially be approved, we don't know. But that could be a significant breakthrough for the price of Ethereum. The likelihood of it being approved, Bitcoin was a very high chance, 70-something% chance by the end of 2023, and it increased rapidly to 90% by January 2024, which of course we saw it approved. With ETH ETF, we don't know, but there's a high chance it could be approved and therefore impact its price considerably. And we don't know what that may have on with other coins behind it.
I'm just thinking about the scenario of ETH reaching 69,000. dollars.
I'm sure you own a few coins there. So, yeah.
a lot would change. A lot would change. Great discussion. Great discussion. I think it's every now and then it's good to have a conversation around cryptocurrency because it actually matters a lot within the finance space.
Question: every now and then, or when it's all-time high? That's the only time we talk about it. Which one?
I really like the term of, are you gonna back it when it's down? It reminds me of like when you're in the playground with your guys, and then someone's in trouble or someone's down. Are you going to back me? Yes or no? So, question to close out. 2 questions. Everyone to share their personal investment thesis around their cryptocurrency portfolio. And then how much would you advise, how much of your portfolio are you investing into cryptocurrency and why? So let's get that round the table and close out. Shual, go ahead. Personal thesis and your percentage of portfolio.
So personal thesis, what has been good is with cryptocurrency, with the investment that I've done already so far, the last few years, I'm not looking to sell, not looking to take any profit off the table. It is what it is now. If I invest in anything moving forward in crypto, then I think there could be an opportunity to take more of a trader's view of trying to go in and out. But it's pure speculation and almost money that I'm willing to lose as well. So I think my investment thesis with regards to cryptocurrency is everything that I've already bought until today, continue to keep for the long term. Because the ones I have invested in are the main coins rather than some of these edge case coins. But then moving forward, if I was to invest, especially during a period where there seems to be a potential bull run coming, then it would probably be more of a trading route where I would take advice from 1 or 2 handful of people that I know, going back again to Olu's example, have been in the space even during the darkest periods, and they were still investing and still in it for the long term. So I would very much be concentrating on the people that I know that went through those winters, are very clued up in the space. People like Daniel, for example, take their advice and people that I trust and then move like that moving forward. With regards to my personal exposure now, it is in the sub 5% of my overall portfolio. But what I would say is during these times, it's also worth reflecting a bit on your personal investment thesis. So when I looked at some of the stuff that I've invested in over the last few years and I still hold today, how have they performed compared to Bitcoin now? Now, Bitcoin, if I use a reference of December 2017, because that was like the first all-time high that they reached, and that's when the first big fever came. If I compare where it was in that period of December 2017 to where Bitcoin is now in this new all-time high, Bitcoin has roughly 4x'd, which is pretty good in around 7 years. Now, just for you to have references, S&P 500 has 2x'd in that period. Facebook has 3 to 4x'd in that period. Apple has also 3 to 4x'd in that period. Investments in real estate that I made around that period have actually 4 to 5x through the appreciation in the UK. And even real estate investments that I made in the last 12 months have 3x'd in that 12-month period versus where Bitcoin has been over that 2017 to 2024. So the point that I'm making with that last part is during this time, have a reflection, have a look at what you've invested in, the different performances at different times. And even though Bitcoin is getting all the headlines now, if you've got a strong thesis, whether it's stocks, properties, even if it's cryptocurrency, I would stay with that conviction, but still have some exposure if you can. That was a bit longer than I initially intended, but hopefully that answers the question.
Yeah, no, that was, I think that was great for our listeners. They would have taken a lot from that, and it helps to shape their thinking. Daniel, please.
Just listening to Sean, just when you asked this question, Pete, in terms of like thesis around investment, I think it's gonna sound like it's on the fence because you need to do your own research, but also be careful who you listen to and what you read. The reason I say that's because in 3-4 years ago, or even the last year, the crypto winter, there were many negative comments being made by big CEOs of big institutions, big firms that did a U-turn and started investing. And it's like they've obviously seen something that's different that can actually get them and their company a good return. So even when you see things in the news, be very careful and don't take it like sugar. It's in doses. Watch news, read the news in doses because it's sugar. Too much is not good for you. And when you think about your own investment strategy, Bitcoin and cryptocurrencies get a craze and a craze mania because it's easily accessible. Anyone really and truly over 18 can invest in it. But you don't hear the news on other stocks like Shuel was alluding to, and Oli mentioned, like Nvidia, Meta, that had really 4x, 3x in the same time period. But because of Bitcoin has a very, to be honest, a negative connotation attached to it, it gets the headlines for many of the wrong reasons. So I think it's very very, be very careful about, how you do so. But mine continues to be in stocks as well. And I continue to invest in stocks that I've done, traditional assets, maybe not oil and gas like Kolu, but some stocks that give me a good return. And when I look at my portfolio and how much is allocated specifically and directly exposed to the assets themselves, it's less than 5%. But I think over time it will grow, because what we saw earlier this year was a watershed moment, and we're probably going to have a very few of these in the cryptocurrency space. And they say hindsight is a wonderful thing, because you often ask yourself, why didn't I do more? Why didn't I do more? Because we're at an all-time high now. That's an all-time high. But this could be the floor of something that's, say, worth 500,000 in 10 years' time. And we think, you know what? We saw the writing on the wall. Why didn't we do it? We read that Forbes magazine in 2012 that mentioned Bitcoin, but we didn't even question or double click on it. Like, what is this thing? How can we buy it? So yeah, hindsight's 2020. But I would say invest in what you're comfortable.
Specifically on that point, Daniel, it was a Forbes magazine that Shuo brought back from the airport. It was 365 ways on how to make money. Number 60, I still remember this. Number 66 was, it literally said, buy Bitcoin. Now, I would have read it, not knowing what it was about, and so you don't know what you don't know, and you just pass. You look for the things that you know. So you're looking for Warren Buffett's advice somewhere else, or something you can relate to, and yeah. So that's that story. My personal thesis is commit to an early adopter mindset. So that means be open to changes that are taking place. Buy and hold for the long term. Only invest what I'm prepared to lose. And wait until the use cases sort of reveal themselves or open up, and then I would expect some sort of upside within the portfolio. From an exposure standpoint, at the moment, it's less than 1%. And that was subject to change based on how the ETF around cryptocurrency is evolving. Because once you then sort of have ETFs launch, it's another way of saying, how secure that particular arena is becoming. So that's my thinking. That's my personal thesis. That's my thinking. That's my exposure. But I'm in the same camp as you guys in terms of less than 5%. I think is a good space. I'm currently less than 1%.
Cool. I just had a quick look at my tracker to see how much, because I didn't know specifically.
I bet you're the most exposed.
No, thankfully. I wish I was. No, so my exposure to, in terms of my net worth, is 1.6% of my net worth is in cryptocurrency. In terms of my thesis, right, I probably going to be keep an eye on the space. Right now, personally, I'm not looking to invest at all-time highs. If there is some sort of correction or pull back, me personally, I will look to see, okay, what is a certain amount, even if it's a direct debit of £50 or £100 a month, and just leave it there until that percentage grows. I think for me, the safe range to probably be, in case this does materialize to something, will probably be from 1 to 5%. I wouldn't want more of my asset allocation more than 5%, because of how volatile the asset is, right? And like I mentioned, number one rule is protect the golden egg, which is the nest egg of your wealth. So, and I can't afford for that to drop 80 or 90%. So I know the crypto bros will tell you, like Daniel did say, I was waiting for him to say, what if it goes to 500,000? Yeah. But that's how they get you. They always tell you about
no. I'm not saying, but you always have to think about the upside with anything. Of you're investing something in the hope that it's going to appreciate. With crypto, with Bitcoin and cryptocurrency, they're more volatile, so they the way it would appreciate would be much more rapid than anything else.
Right.
But of course, the downside is that it could also depreciate as quickly as that.
Yeah.
But if you think about the long term, as you mentioned, you're buying for the long term. You're hoping that over that long term, you would eclipse any losses that you'd have had. But it's funny because as P, it's funny as you're mentioning your list of your thesis. You said like you only don't invest more money than you can lose. Is that what you said?
I'm prepared to lose whatever I throw in there. I can lose it. I'm fine.
It reminded me of something that Warren Buffett said, which no one really mentions now, is only invest in what you know. Because clearly, if you invest in what you don't know, it can sometimes give you good reward. but just not just
But a lot of that is luck, right? And I think a lot of times there's a really good book, The Psychology of Money, where it talks about a lot of stuff when it comes to investing, but we're neither as smart as we think we are or as dumb as we think we are. It's just about having fundamental rules and not going out of those rules and living with the consequences of those actions. So I do hope it goes to 500,000, you know, but I'm not going to remortgage my house to put it into it right now. But yeah.
Now with that, Daniel helped close us out. It's been a really, really good episode, and good to sort of debrief and check in on cryptocurrency. Go ahead, Daniel.
Nothing you see or hear on this episode is considered financial advice. So this is a hat that was a gift to me. As we mentioned at multiple parts of this episode, nothing we have shared in this information is private knowledge, nor is it considered to be financial advice. Please do your own research and please do seek professional financial advice should you want to invest. Until next week, stay safe, stay well, and God bless. If you have any feedback for us, find us on Instagram at Take5 Podcast. The same handle can be used on TikTok and YouTube. We'll catch you there.
Take off, take flight with you. Yeah, for we never fly, but